All right, let's try this. Might get some lag. Analytics. It's good. Oh boy. Let's kill that. 2. We may have some problems here. This is my system kind of messed up. What's this about? There's nothing there. All right. Let's see how this goes today. So this is actually pretty straightforward. This setup, I thought it was going to be a better day yesterday, and it just was kind of a nothing day. There's two setups here that I can see on SPY. And you guys let me know. I guess if you can't hear me, you wouldn't be able to let me know. But we'll see. See how it goes. My computer was acting funky, which happens. So if it messes up, it's my computer's fault. It's like battery issue. Thank you. Thanks for letting me know. So this is a really, really, really easy setup. And I actually think that of all the things that we've seen, this might be one of the simplest that we've seen in the last few weeks, because this is very straightforward for what I like to look at. It's essentially like a rotation right here. There's a cross up, a back up to like another creek that was jumped on SPY, and then it advanced to 552 or almost 553. This is the edge of a very large widening. So there's two things that are kind of concerning here. I think the market on the whole is going to probably move in tandem in this case, because there was a whole lot of similarity between what I'm seeing on the S&P 500 and pretty much all the stocks in that index. They all have these two gaps here. Almost all of them have a gap from the 21st, and then again they have another one on like the 23rd or thereabouts. And they all jumped up for the most part over some creek. Now, some of these charts have run faster than others, and some have been a little bit more behind in terms of like where they are now relative to where they were maybe in early April. But they're all in this very similar kind of pattern, which is actually pretty straightforward. So what happened here is we made a high, and then we made another push. We backed up. We got a little bit of a spring action, and then we advanced again. Part of me thinks this is potentially like an SOW, because it did drop through the initial trend that was created. But in doing so, it's generated like a new broader trend as well. So there's a line that's kind of on the very bottom here. I'm going to call it the ice, because right now it's the main one. But there is another which is just slightly below us at like 546 on the S&P 500. The reason this is a good one right now, and I know I've been looking at the S&P and like IWM and stuff, but this one's particularly useful at the moment because there actually was another widening here that was building out more short term from March 26th on. If that breaks, it should have a eventual hit on 575. So the idea of like going up to 575 is that you had a widening spread coming down, and then it broke out. And usually that goes back to the top of the widening spread. It makes sense because this area from about March 4th to the 26th was where we were kind of contesting dropping the original bottom, which is not the original bottom, but the bottom on the topmost range for the market. So I've been in this kind of mindset for a little while that everything's going to go back to because it seems like it's targeting it, everything's going to go back to this March 4th region. And there's an area between around like February 25th through about March, maybe 5th or 6th. And most of them, it's on average around March 4th. So I've been saying March 4th a lot as a result. When I talk about it on the Discord, when I'm saying like, oh, everything kind of seems like going back to March 4th. That area is really just, again, a retest of this main drop. And if you're in a sell-off mode and you have a big reaction, it's very natural and normal to come back to those levels, right? Like you're going to go back to previous supports that were lost. The first being right here, which is where we are right now at 550. This is a very simple, straightforward setup, but it's not possible to really know and to say it's definitely going to go. You can kind of read the tea leaves and decide, yeah, I think it's going to go, or no, I don't think it's going to go. But there's two options here, and neither option is particularly bad. So locally, what this looks like is an SOS because it pushed over the top at 545. So locally, it jumped the creek and it went up to the top. And the top just also so happens to be the bottom of the previous range, right, from March 30th. So now we're just chopping along that bottom. Naturally, if you hold here, and I said this morning I thought it might go to 553 and then drop. But the reason for that is because, again, there is a widening that we haven't actually broken yet, and that's the bigger widening that goes all the way up to 595, okay? Now, before you cry foul and you say, well, oh, I think we should go ahead and break out and go to 576 first, it's important to note that if this goes down for liquidity, it pretty much guarantees, I wouldn't say it's like 100%, but if this ends up dropping down for liquidity down to about 526, this is going to be like one of those huge moves, kind of like the first one, where it goes from like bottom all the way to the top. And the reason for that is that now you have two different structures that would be breaking here. What you might say, well, why can't you just do it right now? Well, I'll say that right now there's not that much headroom. So even if it broke right this second, I do think it would probably get up to near 575. It may even try to get as high as 583. But if it goes right now, I find it to be very unlikely that it goes all the way beyond that to the top of that, which is really up to 592. So you're really looking at kind of A versus B scenario, and both of them are actually pretty bullish. I haven't really included any bearish scenario, but that just involves breaking down way down here. You really have to go back below. Frankly, you have to go pretty darn low. You'd have to go back below like 507. At that point, it's already like in a huge free fall. So you're probably like, oh, it's bearish or something, right? But it would be starting at 528, that breakdown. So I'm looking at this, and last week what I thought might happen is that we would come up, hit the top of this widening. We might extend like a little bit beyond it just to kind of push it, which happens sometimes. You might push the resistance and then back up. And really all that is potentially here is like an SOS kind of sign of strength with a backup. It's not the greatest, but we already closed up top, so I'm not really worried about that. Like we definitely closed above that previous top. We're in good shape, I think. So I think there's a sense in which it almost doesn't matter like that much to me which way we go first. So the first direction is the classic M cross, which goes up. It's going to do a rotational symmetry almost perfectly. Everything lines up. You would get there tomorrow. By end of day, you'd be at 583. Like, it'd be a really big move. Pretty big couple of green days here after having kind of a sideways day. The other option is actually also pretty bullish, but it's just a different route. So in this one, you actually back up. Now, it looks equal parts, but it's important to note that in both cases, I think it goes back up. It doesn't really matter about whether or not it goes up now versus later. The reason I'm hesitant to think that this goes up now for sure is because it has to jump above here and hold it. And there's really no way to know that it's going to do that for sure until it does it. You can kind of read through the tea leaves, I guess, and say, well, I think it's got enough room or this or that. I was looking at a lot of these indicators this morning, and a lot of them are kind of positioned downward, but I noticed that they were crossing back up after that dip this morning. So it's possible that there's still going to be a decent extension here. You can see very clearly like the M shape, like the wave up, wave up. So it's one of those things where it's like, it doesn't seem to matter much. If it goes up, whether it goes up all the way to 583 or it just barely pops above here, this is going to get overbought pretty fast on the 1 hour. And I think at that point, you're looking at this like, yeah, I mean, it's hard to argue that that is already kind of positioned in a way that that would be distributive, because that, and it doesn't have to be like right now, right? But it would be this such situation where you're basically going to go back and retest the wave. There's really no way around that. So I don't see how, again, it's kind of like it doesn't matter, which is a nice way to look at this. Is like, yeah, it could blow up. It could go as high as 565. It could go up to 565 and go to 581. It doesn't really make a difference. Then it's going to have some kind of a pullback. If it barely comes above, I think you're likely going to come back down, and you could end up going back through it. It's really just a matter of how far it goes. So the wave setup here is, again, pretty straightforward. It really depends on whether you think it's an S curve versus like an M top. And an M top here does not break down indefinitely. It really just comes back down to the first gap area, which is around 530. And then if it breaks again, it probably doesn't do it till Monday. So if you were here last week, I think my guess was that it was going to advance to here. And I talked about how there's a compression into this point. And then I thought it would come back down. So this is relatively unchanged. I just kind of detailed it a little bit more because there's more detail now. And then we come back down, and you basically have like a nothing week, because it essentially would look like flat on the week if it does this. But it's actually really good because it already came backed up to the bottom here. And if you look carefully, this happened before when we did the double up thrust. So it's not, again, it's one of those things where it's like, yeah, it looks kind of crappy, but it actually is a better move. So I'm not saying like I want the market to drop, but if you really want the biggest move possible, I genuinely think coming back down to 527 and like cooling off this indicator, doing that retest, and then taking off next Monday is going to be probably the most, and you could start it, frankly, you could jump a creek on Thursday right here if it does come down, and then you could start takeoff. Why does it have to dip that far? Well, it doesn't. The thing is like if this is an SOS and it's looking like it's going to explode, right, and just go straight up, which is fine. Again, it really makes no difference to me personally. I'm just suggesting that if it breaks down here, it's not that bad, because yeah, it doesn't look like it would have to go that low necessarily. You probably are wondering, well, why come all the way back here? I'll tell you this, when we jumped up here, we made a few consecutive lows right here around April 23rd. It seemed to me that they were trying to kind of push it back around this creek, which was tested. So there's not like a need to sort of go back and retest it, but the intersection with the bottom is in the same place that gap was created right here. In fact, it's like right on that intersection. So it's a high probability pivot zone. Now that pivot could be a high pivot, could be a low pivot, but it's there. And these things I don't tend to ignore because the wave tends to be pretty rigid. So this certainly to me looks like a potential top with a pullback to that zone. On the 1 hour, the EMA is right here at 542. And I saw that there was another mild weakness before the cross up here. And it's present afterwards as well. I don't know if you can see it on the chart very easily, but it's actually present like right here as well, because it backed up again and like dipped back down. It's following that other trend, right? And that's okay. Again, it looks like it could be fine. It looks like it could just be an M cross. But this is something noteworthy because if you were to come back, this kind of zone right here between this previous top and this bottom would be the suggested target. So it would, again, does it have to go below, let's say 538 or 536? No, but I was trying to figure out like, well, what exactly is there? Like, why would we want to back up there? Because at the end of the day, waves are great, they're cool, and they make timing kind of a little more possible in the market. And it's interesting to see what the market's targeting. But ultimately, like, we're really talking about liquidity levels. So like, what was not tested here? And the only thing I can find with some relative like teeth, like this looks pretty legit, is this area right around, there was a bottom on the 23rd of April that had like a peak, and then just kind of broke out above, and the opening value was 536.50. Well, I went back and looked at that 536.50 to 537.50 zone. It's about $1. That is an area that we had two gaps previously to the downside right there, and you can see we broke out. And I'm looking at that like, well, they didn't hold very well, did they, as support? So it lost it as a support, lost it as a support. This is the only place where we breached above it again, and we've kind of had an elevated run. So I don't know if it's going to be now or it's going to be way later, but I think at some point you will come back to that 537 mark. And I know that seems a little bit odd because you're like, well, why? You know, we broke out from there. We dipped below it. Isn't that support right there? It's just the way that I do it. I don't think that unless it comes back and like really hits it and wicks off of it or something like that. And I think this is close, but it's just not quite there. So, I mean, it's contestable. I get it. And it also looks like it comes to the bottom of the gap at 534. So it's, again, one of those things where it's like, I don't know, Booksy. Kind of looks like it already got tested. I don't think it's going to come back there. I totally get that. But I also feel like it's a very real possibility. If we don't do it now, we may do it later on a backup way over here. So I'm keeping this in mind, again, going forward, because that level around 537.50 to 536.50 seems like something that just wasn't checked. I think the levels that we're at right now do look very strongly like a potential M cross right here, like a rotation. And the rotational symmetry is super straightforward because it leads you right back up to that 583, which has been on the target on my charts forever, since way back here. You know, we just haven't gotten to it. But it is in the right place for it. Okay. Well, how will you know? If it breaks out and it goes, you're just going to look to see if it holds support, but you really won't know until it breaks out. Is it broken out right now? No. This is essentially like hitting a hook. It's also hitting a really strong potential resistance for that. I'm trying not to like clutter my chart too much. I just decluttered it a minute ago before starting the stream. But right here, this push up went right to where it needed to go. So everything about this is straightforward, I think, because if it backs up, there's two levels of support right below. I think personally that those could be very strong bullish supports. I don't think they're necessarily bad. I think they could be potentially very, very good. If we go back and we get them now, we're in a much stronger position. And I honestly think that if we do that, we might have another like 9 to 10% day. Seems a little out there because you're like, well, how could we have another one like that? It's just a squeeze motion, you know? And you look at this as a rotational symmetry. Again, I don't want to like push that too hard on people, but it is a rotational symmetry. And we had talked about that before and it didn't work. And you're like, well, yeah, but then it didn't do it. I know. Like I'm aware. I'm aware it didn't do it. But this particular setup right here, should it go back up and then back down, I think it's pretty easy to see it. I think you guys can visually see that. It's really straightforward, actually. So again, I'm not saying I really don't want it to run. I'm not saying that. I'm just saying like if it backs up to 530, we're going to be in for like probably a really nice, in my opinion, like a really nice setup, right? And I really do think it could be quite explosive, maybe even going into Friday and then come back down and get ready for like a Monday run. So I think there's a very good chance that happens if we're down Wednesday, which is tomorrow. If we break out now, all I can really tell you is the levels above, 565, 583. I can't really promise anything because, again, this is a evolving setup. That line doesn't exist. And at the end of the day, like, even though the rotation is there, there's really no reason why this couldn't like go back down for a test there and do it again here. Like this is a whole nother scenario, but so it's just one of those things where it's like, I can't really judge if it breaks now, how quickly it gets up there. The S-curve itself would finish by Wednesday. So you're basically saying it's flip-flopped. Yes, but that's a great place to be because we have almost like a win-win scenario. Like the only bad scenario here is if you enter like a put position and it rocketed. But if you got like a put position that was short-term and a longer-term long position, like a call, you're pretty much inoculated from any kind of bad moves. So if you got a lesser, like a weaker put position, for cheaper, but then you had a longer term call position, if it drops down, great, you're covered. It covers maybe some of the losses on the call. And then you can buy in even and average down if you want, if you think it's still a good setup. But then if it breaks to the upside, you've got more position heavily long. And so that call position or that put position could go to zero, which, it may, depending on how short term it is, but you've got it covered by a pretty decent size, longer position. So this is just one of those situations where like, I find it to be an incredibly attractive trade for that reason. Now, this reflects all across the market. Like I was saying, I can't really find any stock that doesn't quite look like this. Like they all pretty much have the same thing. This is Starbucks. Starbucks is one that I think it had like 4 consecutive misses, but the greater narrative on Starbucks, like it or not, is that it's done nothing but grow in revenue. If you go back to when this began and you just kind of click through the revenues, it's a super simple way to just kind of look at, hey, how's this company doing? Are they growing? The answer is yeah. It's not just an inflated stock price. Back here, you're looking at 5 billion estimates pretty regularly, and that's it. And this is not that long ago. This is in 2018. So you're talking about 5 to 6 years maybe. And then you're talking forward, you're looking at it going from 6 to 7 to 8, and now it's at 9. So this has been a long-term growth stock. I think that when you look at the big picture here, certainly there could be some nasty downside. You can see there's a bit of a weird wedge type deal forming. It looked like it broke out back here in February and then dumped off a cliff. So it looks like a fake breakout. This makes me have a lot of questions because I'm like, well, are we just going to flush down again, and go to like 67? Is there another weakness here, maybe right here that I'm not seeing? Are we needing to go back down to that 68 level, from prior times? Maybe. It's possible that this was an early attempt to jump the creek and it didn't work, so then they go back for liquidity. But here's the thing. Right now, this is a daily chart and it's incredibly oversold. And it's been incredibly oversold for quite a while. And it's going into an earnings right now. Maybe it beats, maybe it doesn't. I almost think it doesn't really matter. And I'm looking at the chart and I'm like, it's the same thing as SPY. You basically have that gap below at 80, and it doesn't seem like it really makes a huge difference, because if this broke out, it goes into an SOS, it's going to be going to like 89. If it hits 89, it's going to be above that creek level right here, coming down. And if it drops through to the floor, right, then it's like, well, who cares, right? It's already ridiculously oversold, and you can see down here that there's actually a building curl that's been happening since, again, that March 4th area, right, which is way up top. And honestly, like this original sell-off down to 97 is the target region. That's where the EMA is. It hasn't ever come back to test it. So if it drops down, it's like, I don't want to say it's a no-brainer trade. This could be a bear flag, sure, that has continuation down. You can't suggest that it couldn't do that. But I'm looking at the chart like, well, to me, it looks like a simple, like 1, 2 with a dip, and then there's a 3 right there. That jumped the creek. And then 4, we just have to come back and test the creek. So, like, it's essentially ready to go if it holds that creek jump. It's really straightforward. And, like, I like to see it on the chart. I haven't really seen it enough to tell you like here's some exact examples of this, because I feel like I've seen it enough that I'm like, oh, I'm starting to notice it, but I don't have it off the top of my head. Like, here's the examples. But I've noticed that if the RSI does the creek jump early and it holds up, that it could be actually a leading indicator, which doesn't always happen because RSI sometimes is not very good at leading anything. It's obviously following the price action. But if it does the creek jump earlier than the price action, it could be really, really bullish. This is not a bad example of that, but there's like one right here where it kind of jumps up early and it advances. And it kind of did on the price action, but it kind of didn't. Like if you were looking back here, you'd be like, oh, I didn't really advance, right? So you see how it like pushed up and it didn't advance, but it did try. It did push the resistance, it just didn't break. Comes back down and you can see it holds. And notice that it's already like in this kind of build out mode outside of the creek by the time it actually breaks the physical creek price. It's at 50 here, it breaks up. That's right where it actually breaks. And look at that move, like it's huge. So I look at stuff like that and I'm like, it doesn't have to be 1-to-1, but if this were to drop down and this holds the creek advance, I personally think it could be a very, very, very good setup, because I actually really like to see that. I'd like to see it try to dip here and then break back out and be like in advancement mode on RSI while the price action is like, oh, we're getting ready to go here. And then if that breaks, you know what I mean? This is going to be kind of an off to the races type deal. I think you're likely going to come all the way back up. This is a 50% retrace on the move, and it's right at the bottom of the gap. So I don't want to say it's a no-brainer move, but like Starbucks from like 80, if it hits 80 to like 95 is a pretty straightforward move. There's also a long-term, I wouldn't call this one like an ICE per se, but it's similar. It did check it. So the longest out that it might take is like June. So, I mean, you could see like, yeah, it'll explode. It'll just go, Booksy. Well, I mean, you never know how these things end up working out, because, yeah, that could be a really big move. It could also be that this is the middle of another wave. And then you have kind of a similar deal, and you're really not going up there till way later. But longer term, if you're looking for like a 1 to 2 month move, especially out into mid-June, it's kind of like the latest I would see it going up there. And all that really is, yeah, it could be looked at again as kind of a flag or something. Assuming it makes that jump, it looks good to go back up to that 50% retrace. So this is another one that I was kind of like curious about. I went and looked at the COVID region. I thought this was really interesting. If you look at COVID, the drop that happened in March, so this goes all the way to $49, right? $50. It goes all the way up to like 127, right? If you look at that and you divide it into a 50-50 part, you can actually see that this original range right here is currently being tested. It started assuming that range again, and it was the place that it was bought in. So the buy-ins here have been all kind of in that zone, and this is the same zone that we're presently in. So if you're careful and you look at this, you'll see like the breakouts correlate to those points right there. You can see the gap right here, right underneath it. And it's the same spot again. So I'm like, I'm not saying that necessarily is a good thing, but it certainly is a pattern. And I definitely could see how this could have this pump and then drop down again. Don't get me wrong. But this chart looks pretty saucy to me, like spicy, because it's got that, it just looks good. I don't know how else to describe it. It's got that move. And I was looking at all the earnings charts. There's more than one that look pretty good. But Starbucks to me was like, oh, it looks pretty good, man. Like, even if it has some more downside here, I don't think you're that far. I really don't think you're that far from the floor at this point. Worst case, it's like 68, which is far, but it's not like ridiculous. And then you're looking at 90, and that's a big move. So that 90 is not going to be left forever. And then this is also really interesting, because if you look at this has been crawling back up over the 50%. So it's almost like all of this has been like a consolidation around the 50% backup from the COVID to the top, which is not the case for all stocks, because as you know, some of the other stocks in the market kept running. Starbucks did not. It's been consolidating kind of right at around that 50% marker, which on the chart, I've got the dotted line, but it's like right there. And look at every time it's been below there. Again, it's kind of correlating with that uptrend, but every time it's been below there, if you had bought in, you're looking at a decent move. So is it going to break down here, or is it going to fly? Again, I don't really think it matters that much. I think that if it does drop again, it could be later on. We don't know what the future holds exactly for the market, especially going into July with the tariff junk and how that might affect coffee. But I think coffee was one of those exempt things. So it's probably not going to be affected that much. But yeah, I mean, even if it dropped now and it had some kind of a bearish drop here, it's like, I don't know, man. To me, that's still like super bullish based on where it is. So I've never really looked at Starbucks before, and I know you guys are like, well, what the heck? Where did that come from? Well, it just comes from the fact that it has an earnings report after hours. I don't think it's something I would trade personally on earnings, but I think the reaction to it might be a really helpful trade. So could it just rip up on earnings and be up at 91? Yeah. But if that happens, I missed it. You know what I mean? I'm really looking at this like I'm looking at SPY, and I'm like, yeah, I could see the benefit of the drop down into Wednesday, Thursday this week, back to 80. And that's, to me, it's a big trade opportunity, I think, if it does that. And there's a high probability if it's, gets the buyback in, it's going to rocket pretty far. So, and on the big picture chart, it looks really good. So that's always a positive. Okay, let's talk a little bit about AMC. I know that you guys are eager to talk about AMC. No one was like coming on here to talk about Starbucks, but I figured I charted it. I would share it with you because it looks like a good setup. It's a better setup after earnings if it drops to 80, especially if it beats and it drops anyways to $80. I think that'll be really, really positive. I'm being patient with it because I'm like not in a rush to kind of trade it. If it doesn't work out, then oh well. I mean, it could just rocket. Be up here tomorrow, but I'm like, On the off chance it comes back down, I'll wait a day or two. And I think that when you're looking at the whole, I'm like, yeah, that would be really awesome. I think you'd get a really explosive move next week. May might be a huge month for a lot of stocks. So let's talk a little bit about AMC. Because, Booksy, you said you were expecting certain things to happen. It didn't quite happen, but really, like, none of the expectations came true in some ways. In some ways, okay? And you might be thinking at this point, well, is it just busted? Well, I'll tell you this. It's a bit of a yes and no for me right now because you guys are like, that doesn't tell me anything. Meaning, like, I can't say for sure it's not busted, which is different than before. Because before, it definitely was not busted. I'll show you what I mean, okay? I'm going to use the cleaner chart. So maybe about a week ago, when we were looking at this, it wasn't busted. And I would say, like, nah, there's nothing wrong with it. Even right now, I'm kind of like, it's better than it is worse, right? I'm more favorable about it than not favorable. But here's the problem, okay? When this went into the downward motion, it did not stay symmetrical. So it did this kind of little micro head and shoulder right here. And normally, if as normally as you can get, if you have this bounce out and it stays pretty high, right? And then you get that advancement and you come back down. You're looking at the LSPY level. You can see it tiny, tiny level. It's like right where we're at right now. And this exact thing right now that I'm doing right now, I'm showing you on the chart, it's wrapping around 271. That is the precise problem here because in a breakout mode, what this does in the end, and I've showed you guys this before, so I don't think this is like brand new, all right? Some of you are like, yeah, I've seen you do this before. You see me do this chart before. This is just a pattern chart, okay? So what happens is you make the auto reaction and then kind of a phase B top, or it could be a little bit of both, depending on how fast it goes. meaning like one happens before the other. Like the auto reaction could go all the way up, which is not usually great because way, way, way too high. But this is usually pretty typical. And then you're going to develop a phase B, which could go sideways kind of indefinitely, but it usually doesn't take that long. And this is the cat ear that we traditionally talk about, like the second LSPY, right? It does tend to be pretty close to the first. And then if it drops down, what you see is you see the wave has to make either a higher low, which is an LPS, or a lower low, which is a spring. If it's bullish, it makes the spring, it comes back up over the creek. And that's how you know, oh, it's advancing. It's like jump the creek, right? We've looked at this diagram, I don't know, 100 times. But what I've always said, and what I still think is very true, is that it doesn't ultimately go. And what we find is that, what I've found is that it almost always works this way, is that there's a particular level that becomes a really critical breakout zone. And it's right here where that LSPY is. It always ends up being the most key and central spot in the move. If it doesn't break there, then you're in trouble. If it doesn't break there, it's like that August move where it becomes like distributive. And it really depends on what happens here in the overall setup. Okay, because it's not, again, this isn't like cookie cutter. Sometimes they're a little different. This turns into your traditional cat ear, right? If it does break that zone, then it's always like this really explosive move because you've left, at this point, you've made the creek, you've jumped it. If you can get up to that SOS, it's going to go ahead and advance to the next range. This becomes this kind of pivot point, if you will, of like severely different moves. And usually what we see is that the rising trend here correlates very, very closely to that spot as well, okay? But here's my problem right now, is that if you look at the big picture, the biggest picture possible, in my opinion, it's not bearish. Now, I know that the chart itself technically did break down pretty early from this rise, right? We had this like fake out move that was pretty difficult to read, but whatever. It happened. It's over. Now, SPY, the S&P 500, took a lot longer to kind of come back and retest that initial double bottom move, but it also never stayed in the same spot. It advanced early on, right? Whereas AMC was kind of still capitulating. There's an extra bottom basically on the S&P 500, like right here, before that bigger move and then the secondary buy up, right? So the biggest possible move here happened on the 9th, right? If you go to AMC, you'll see what I mean. This is the move right here on the 7th. And then you see the 9th itself is not quite as big. It's a very strange thing because it's like, it's almost asymmetrical. So like the first move is like the larger of the two on AMC and it's backwards. It's different than what happened on the S&P 500, is what I'm trying to say. There was a big move back here, right? If you look back on the 7th and then the 9th. Okay, my point being, this actually advances over the top and it builds out that range. And AMC doesn't really ever do that, but it had already come back into the previous range. So it's just a different chart, okay? Different folks, different strokes, all right? What I was looking for was a continued press against those higher creeks, but we've had none. And that's very interesting to me because the setup here doesn't really have a whole lot of differences between what we see in April versus now, except for this one little problem, which is still, again, on the bigger picture, that this has still had no success in coming back over this original LSPY right here. So what I said, I don't know how long ago, but we did a chart that was like, here's what it looks like if it distributes. And this is kind of looking like that, but it hasn't actually done the sign of weakness on the bigger picture, which is strange. So either it's still forthcoming, like for example, if the market drops here, maybe AMC goes ahead and makes that drop. And then we've got the sign of weakness. Because right now it hasn't done it. So there's like two big, I guess I'm trying to say is like there's two major issues here. One is that in order for this to be really successful, what we would need to see is we need to see this come back up again to about that 290 area, 292, and then it needs to come back down and eventually by earnings kind of land on top of this LSPY. It can break below it depending on how it's going, right? And we may end up seeing something similar because it's already done it once. We may see something similar to that again, but it can't hook beneath it. It can't ultimately hook beneath 276. Well, that doesn't make me feel good, does it? Because right now it seems like what we're doing is just continuously hooking beneath 276. Hence my hesitation. And then the other problem is that here, and I'll show you what I mean. When this came down, now we can look a little more nitty gritty at this little local bottom or whatever it is. This is where my bigger concern is right now. So if you look here, this was really obviously like an SOW. But I had drawn on the chart that I thought what might happen is that we hit the top here, which is fine. Because again, if there's an SOW here, who cares? Which is what I was thinking earlier. Is like, well, if it drops, it did drop there, so maybe it's going to come all the way back down, and it's going to come back to this tiny little gap at 267. But then it never went to 267. Why is that bad? I mean, we want it to stay up. Well, it's bad because it's like they're saving it for something. And it's also bad because as time goes on, this ice level is rising. You see what I'm saying? Yeah. So keeping the chart elevated only really is good if it's an LPS. It's just not going to go low again. But then I'm like, well, why the heck would you have a sign of weakness here, not hit the creek again, instead just come back up and hook on it? And now you're like jumping over another creek, and we still haven't come back, right, and check this low. And you guys are probably like at this point like, well, again, who cares? Higher lows are good. I get that, all right? But it's messing with my head because it has not made the appropriate move over 276. And I was saying in I had gone to the airport yesterday, and I think I just barely said 276 is the level or something. It's like all I said on the Discord. It is the level. It has to be that level. And it will not be bullish, in my opinion, unless it gets above that level at some point and holds it, because that to me is the original kind of liquid center. And all we're really doing right now is just kind of sitting beneath it. And we are, frankly, having trouble. We're basically pinned beneath a rock in a hard place. So I'm not really a big fan of the setup right now because it didn't follow through on the sign of weakness. Instead, all it's done is kind of break down these hooks. Now you might say, well, okay, that's fine. Well, who's to say it couldn't just do it later? Hence my point is that as you go forward, because of the way this is built, the longer it takes to do that drop, if it does do the drop, the more likely you are, and I'm going to get rid of this kind of stuff, the more likely you are to drop through that ice level. Because if the goal was from a bear standpoint or whoever, an operator standpoint, to come back to 267, there's a really small gap there. It's kind of a weird one. You have to zoom in and you can find it. And I think it matters because, again, there's a level here that was a resistance at 267 that really hasn't been finalized. The longer it takes to get there, the more likely you are again. So yeah, you can have it break down and go to like that 267 now. But if it does that, guess what? Especially if it does about like Wednesday, well, you've potentially just created a new SOW on the bigger picture. That doesn't really strike me as a great thing, generally speaking. Why is it an SOW? Why couldn't it just be a spring if that's like a phase B top, spring and then jump the creek? Because it hasn't generated very much of a phase B bottom. And that's why I'm like, I don't really know how to say it other than I just don't know. Like, what is this? Because to me, when I zoom out, it really just looks like a really extended cat ear. You know, like it just looks like, oh, there's the paw and there's ear one and here's a middle. And all it's doing is breaking down, weirdly crossing creeks as it goes. So, I mean, it's kind of misleading, or it's misleading somebody, because it looks like it's actually jumping creeks, and it is to some degree, which is strange because it's not advancing, but it's also not falling. It's a really clever setup. So when I had mentioned this before, I was really thinking about the bigger picture, needing to just continually advance and make new highs and push here, right? Well, why can't we just go down and then back up on May 1st? You said that if this happens, you're expecting maybe May 1st through the 5th to be pretty bullish. Maybe it's really bullish for AMC, but it's just a little behind or something. Yeah, it's possible, that this doesn't really go anywhere. Maybe it has a really mild dip. Maybe it doesn't break. I don't know for sure that it has to. It could just come down and hit 268. Sure, this is a bunch of woulda, shoulda, coulda type statements. But yeah, then you could have it potentially break out, and Monday, while the market's going crazy, AMC's just sitting here, and everybody's like bemoaning how great the market is and how terrible AMC is, and AMC doesn't move at all, potentially till like the next week even. I mean, it's very possible it takes that long. That would fall in line with what our expectations are, albeit this is a very strange middle and not something that I've really ever seen. Now, the alternative here has to be addressed. The alternative here has to be addressed. And I mentioned one scenario where it's kind of bearish and it basically just lists down, and ultimately we come low and potentially do the exact same thing, albeit, I don't know exactly how it would work, because it'd be a weird situation at this point to have that happen, because it's just going sideways. But essentially it would just be like a drop here that has the same reaction, but instead the severity of the drops are extreme and the push-ups are not. So the drops are more extreme, the sell-offs, the waves down are extreme, the waves up are not. And this is a way that you could argue that we get back to lows if you think that we're going to come back down. And potentially, and I said that this is an opportunity maybe even for a bigger move if it does go down there, but potentially either double bottom or come to a new low. That's how it would potentially work in that setup. I'm not like overly fond of this one, but I think if it were a matter of like, hey, we're just going to go down and double bottom or just test the liquidity on the floor, I don't think this is necessarily bearish either. Short term, it would feel like that because it'd feel like, well, we're not advancing. But then what you'd probably see, even going into that Friday, into that Monday, is you might even see this come back up before Monday, and like advance over, for example, like a buy-in, essentially, here, and advance over like a previous top in order to make like a sign of strength, and then be ready to go Monday the 12th. And it really doesn't make a huge difference in the grand scheme of things, because this breaks out, and if it's an SOW, who cares? It comes back down later on. My only major concern is in this scenario that I was looking at yesterday, and I need to be very clear, like where this comes from, because it looks like it comes from nowhere. For some people, they're going to look at it and say, well, I don't know where the heck that came from. It's essentially the exact same thing I just drew, but instead of advancing, you actually could potentially just fail to advance. Now, this would be some kind of like really, really rough hook. But I noticed that not even just on a rotational standpoint, but like the rotation leads itself. So you see that turnaround right here. Basically, it's a wave up, pushes high, wave down, pushes low, buy in, but doesn't go back over like the 276 level, which is like the center mark, right? So if you distribute it here, sure, you could have like a 50-50 down, and that would get you basically back to the floor. We don't know what happens, something around earnings, buys back up. You may not get above 3. And I was looking at this like, well, is it even possible that that goes as high as 3 and still doesn't go? And the answer is yeah. Because if you're down here, because of the way this is set up, right? I'm not saying for sure it would do this, because this is still a creek jump. But in looking at the big picture, that creek would be very, very, very steep. And so the reality is that coming back up to the top does not guarantee a move. So we'd be on basically what I'm saying is if it goes to 245 around earnings, and that's where it is, I'm going to be on the edge of my seat all the way up until 3, because there's no way to know with the way this is set up. There's a hook present right here that goes across to that 3 intersection on May 19th. If you push the move down low enough, could you get a big enough buy-in right here? Man, I don't know. It's only 22%. I don't think on the OBV it would make sense. But when I looked at the big picture, I'm always like trying to my best to just make sure I'm like, hey, is this possible? It's really the same as this setup right here. Like it's almost identical if this happens. This is almost the exact same setup here versus here. And that's where I'd have to kind of hang my hat and say, yeah, this is the same thing that happened back in to some degree, albeit it's not exactly the same, as you're more aware. Because again, there's certain things that happened here that are not happening here and vice versa. For example, we're jumping the bigger creek right here. But that kind of lends itself into a double-edged sword, because if you pop up to 3 to get back to that creek, you have to come all the way back down to 215. That's a lower low than the bottom. Yeah, it is. Yeah, it is. It's not low enough, but maybe that's all they needed to do, you know. And I've been assuming a lot of things because of the nature of liquidity that they would do this big upthrust and have this massive fake out. If your goal is to run it in June, it may be more beneficial to drop it low here, pop it up. And I'm just sitting here staring at this chart like, ugh. You know, yesterday I'm just doing the ugh sound because I was like, man, it's not done the sign of weakness yet. It hasn't happened. We would be like looking at what happened in February as a comparison. And this is what I'm trying to get at, is I've been talking about it on the Discord group, because we have one of our guys on the Discord does Elliott wave, and he said, well, I think it has to come down and make a final wave. And I'm like, okay, he may be right, but if it comes down to make a final wave, then it has to be, again, like a spring. Otherwise, we're in the same situation where we could have this like buy up. It's kind of like this, right? You push down low. Sure, it could break out, but then you'd have to end up breaking back above the top. So we'd be in the same situation we were back there, where we'd have to come all the way back up here. The hook is designed that way. Certainly looks like it could just lead you right back to 3. You could be stuck. What do you mean? So we're screwed if it goes down there? I didn't say that. I just said it's a bad situation. And frankly, there's not really much preventing it from happening unless you believe that the OBV and the liquidity needs this massive buy-in. If you don't believe that that's necessary, it's pretty easy to look at this and suggest that this breakout could be the fake out, right? There are some differences, of course, being that this creek has already been jumped. Okay, I think that it's been jumped. I think it's widening out. I think it needs the upthrust, but I definitely could see why that argument is valid. So I've just got to present that to you because it's there. Why? Why is it there, Booksy? Because it is. Because if that drop happens, you have to come back above 3. And I know you might say, well, we always had to come back above 3. Yes, but there's a difference between approaching something with strength versus approaching it with weakness. And in my opinion, if it comes down here and it breaks to a new low, it looks far weaker, especially because of the way this sets up here. It's that simple. At that point, you could basically have a full wave reset if it breaks above this top and do it all over again. Okay? But you said that this and that and the other about the waves, and yeah, I did. And I'm not going to change my mind about that. That's not what I'm talking about here. I'm never going to change my mind even if it doesn't happen. I'm never going to change my mind about the OBV setup. The OBV setup is what it is, period. If it doesn't happen, it doesn't happen. But right now, like, I can't tell you, oh, it's definitely going to happen. Because unfortunately, as you seem to be aware, hopefully by this point in this talk, this long bout, there's really nothing here that's been particularly reassuring. Oh, and now we're going down. Finally. So that's actually what I was kind of like waiting for. We haven't done it yet. So I guess we're going to get to see it on stream. So we're finally making the drop. We're doing it live. Yeah, my concern is that it drops through there and it makes the SOW. So without taking my eyes off of it for too long, if you go back here and you look at this sign of weakness right there, after it had this like buy-in period, that was at earnings, it drops down. It's not just a sign of weakness because it breaks through this trend. There's two parts to this. One is the trend, but the second part is this, that it made that low right there. And then ultimately it doesn't have continuation. It's not a spring, right? Because it drops low. So there's a lot going on right here in this sign of weakness that causes this to fail when it comes back up and drop down. And likewise, notice where it is when it fails. Like it's sitting beneath that LSPY right here where the drop-in happened, right? It's below it instead of above it. So we don't want to be in a situation where at 268. I wish it wasn't like this, guys. I wish I could tell you for sure. But we're in this bad situation where like at this point, because of the way this thing popped, if it sells off too late, and it did, this to me, in my opinion, is late. If it sells off too late and it fails to hold the bottom here, and especially at 265, I think we're going to be in a crappy situation. I'm not panicking. I'm telling you that this is a real like game changer, because if it drops through here and makes that SOW, then there's a very strong chance that this is indeed going to try to go back down to lows. Now, it doesn't mean it couldn't get back to 3, but it would certainly be a less desirable situation. How do we avoid that? Honestly, because of the way this is set up, the only real way to avoid this is a change of character at this point. Because again, this is looking really difficult to call bullish. But like I said a minute ago, it was more bullish than bearish because it hadn't yet made the drop. Now it's making the drop. So now we get to see if it's going to go. And yeah, unfortunately, if it makes that drop, I think we're in a bit of a pickle. Especially if it dumps through that level here. It just looks like a cat ear that's delayed. And then if it cannot hold that bottom, it's such a mixed bag too, because look at the MFI right now. That MFI looks like it could be potentially like about to hold it. You see that? It's so close. This is a 15-minute, so it's not like the end-all be-all, but it really looks like one of those like a do-or-die kind of setups where it's right on the verge of collapse, but it's also on the verge of like success too. Yeah, I don't know, man. It just looks like it has to come down low. That's the problem. It's setting up too high. This is classic AMC distribution nonsense. If AMC fails to come back and retest right away, a lot of times what happens is it floats high and it really makes you think it's going to go. The only thing I'm like that's kind of making me reserve judgment right now is just that it hasn't broken through here and it hasn't broken through 265. So I had it on the chart, that 267. But I think the gap goes down to 266. I think if it goes to the gap, it's a weakness. I hate that. I really don't like it because if it had just dropped earlier right here, it would have been fine. I really do think that. I think if it had come up and then distributed down, this would have been Monday or even Friday. I really thought it was going to come right back down, and that to me would have been fine. But it kept staying high, so sorry for tisking in your ear. So this 50-50 goes quite low. It would go down to 258 if it does the full 50-50, which is why I had this on the chart earlier. 258 is I don't know. I guess it's backing up to here, like to come back and retest this. This top, I don't really know what else it'd be going for. That'd be like the first check if it drops that low. So yeah, in order for this to be bullish, and it just doesn't look as, I mean, I'm struggling because I know like if it drops, it's going to just be like crap. So this setup was looking super, super good all the way up into here. And I know people are going to be like, well, I was bearish all along and it didn't look good. Doesn't matter to me, you know, because to me, I was like, I'm looking at it for certain things. I'm not seeing anything bad. And what I saw was that it was jumping creeks. And like, see this? Look at that really nice creek jump and then retest. Yeah, it like made a lower low, which I'm not a huge fan of, but it did check it. And the same thing here, jumped up, checked it. It's like they didn't really leave any stone unturned until this spot. This was the main problem area right here on Thursday last week. Because everything else looked fine. I was like, I don't know, it's just jumping creeks and holding it. All right, well, we're not going to fuss about it. We're just going to wait and see what happens. And what I want to do is probably go ahead and get a proper outer creek on here. It looks like that's going to be it. So, yeah, and this lends itself pretty well to that other theory, as you can see. Is it all bad? No, it's not all bad. It's just that when and if the market does this and it comes down again, we're not going to really know until 3. I'll have all the charts updated by that point if it goes down, but we wouldn't know until it gets down there. Yes and no. There's definitely crappy situations with AMC, but this was a setup that had a lot of promise. Unfortunately, it's not looking awesome. But again, let's just wait it out and see what happens. Yeah, I mean, it's just a mixed bag. You can make an argument that it's okay still if it holds here. It's like everything's right where it needs to be to hold, but if it punches through that, it's not looking good. God, it's gonna move like 1 penny at a time here. I'm a little nervous because if the S&P now drops, it's like then we're just gonna go with it. I don't know, till Wednesday or something. I don't really want to do that. Could be even worse than what I'm showing. So let me talk about this other situation. I really kind of mentioned it, but I didn't really talk about it. What if it comes down and it doesn't make a sign of weakness under 265? Because sure, it's definitely possible it's going to drop this trend right now. But what if it doesn't make an SOW by coming beneath 265 and it stays above there? Let's just say it dips here and it doesn't go all the way down. Does it constitute a true sign of weakness? No. So if it drops down here, what it does do is it changes some things. So what it would do is it would, if it went to like 265 and it did not drop to 264, it didn't go below this marker, it could be fractions of a penny. So we'd have to watch it and see carefully. Is it a traditionally like a sign of weakness here? No, not necessarily. So if it does this and then jumps back up over 272, which is currently where that intersection is right here, you can see we kind of came to the tail end of it. Now we're in a position where it looks like Wednesday is going to be the pivot on that. The creeks are intersecting right there. But let's say we went up to, yeah, I was like right there. Let's say we went down to 265. We double bottoms. It's fine. Then it breaks back up above here. Is that bearish or is that bullish? So it comes back up here. Well, I mean, yeah, it pushes the creek. So what that would tell me is that it's likely going to drop that trend when it comes back down. What it doesn't tell me is that it's necessarily bearish, because it only suggests that that trend may not hold if it comes back through again. So like, for example, if this went up to the top, let's say you have this drop down, it stays at 265 miraculously, and then it breaks back out again. I'll make it yellow. On Wednesday, and then by Friday, you know, maybe you're back down to earth again. You hit 290 or at least come up above 285 here. It pushes that. So you got a little push on the creek. Well, what it would probably suggest to me is that if it comes back again and it tests that line again, it's probably not going to hold it. So that situation is a little bit different than the other two, because it's a little bit more in the middle, of course, but it's also like a situation where you could drop back through here again, and this could be thought of as a phase B bottom, because if this is like a 1-2 phase B top, and this ends up being the floor and then it pushes resistance, this could be a move into a spring. So that's a different setup, because you could have a new low there that isn't necessarily bearish, weirdly enough, because it would just be like a break beneath. So it's like this, and as long as it holds that phase B bottom at 265 on the return, that could be it. I mean, that's essentially all you need to do. I'm not sure exactly what that would look like. Probably like that. And then Monday, you'd have to have a creek jump. So it looks like it's going through. I mean, I'm on the 30-minute chart, but to me it looks like it's pushed through it. It's going to go for those gap zones down here on the floor, I think. And this is why you use really tiny gaps for something like AMC, because our operator uses them and they don't seem to give a crap about daily gaps versus penny gaps. If the penny gap is there and it's a liquidity gap, they may come back to it. And there's a few down here, so man, I was talking about 267. Sorry for doing that horse sound effect. I was talking about 267 back here. I was really hoping we would just come back to it right there. I mean, this would have been fine. It would have been right in the right spot. They should have known that because it went the opposite way, that it was bearish. It looks like, oh, it could be bullish, but it's actually bearish. And now it's not even holding like what could have been, I suppose, which is this creek jump here. Now it's beneath this one. It's a fake out. Yeah, this is not my favorite. Just not a fan of that kind of move. I guess I'm a little confused. It's like what the point would be also, and this is just me thinking, I always think about like what would an operator maybe be trying to achieve. I don't know. Just to get back down and trade those lows already. But it definitely doesn't make me feel confident because about the move, a potential squeeze move to 5 and then a bigger drop. Because then to me, this reads like a pump and a distribution. I mean, you can see the 1 and then the 2, 3 right there. So again, do I think that this is already coming back to retest it? Yeah, I mean, technically it is. So again, if I had seen this on the grand scale and thought, I don't know, man, everything just came too low. That's all there is to it. You're not making any sense, Bugsy. I'll put it this way, okay? Because when I was looking at this like a week ago, what I was imagining was this comes down, hits here, and then crosses up. So do you see the difference? See how this is like another M cross? It's like a 1, 2, and then a 3, 4. But instead of going down, it did not go down. So if this had gone down and crossed up, I think what we would have seen is that push went to like 292. And that would have finished this cat ear but high. So instead you'd have this like push up. Now there still would have been the expectation on this wave, as you would imagine this would have come low, right? And then pushed up to the top. But there still would have been the expectation that this has to come back down, but we would have placed it like over here, just like we were originally thinking. And that's exactly what I was thinking might happen here. But instead we failed to cross up and over, which means that the buyers are not stepping in. At least not right this second. They're not stepping in. They don't seem interested right this second. So we didn't make the cross up and over. Instead, we made the cross down. We actually kind of did the opposite. We had like one chance. But instead, we went here to here and crossed down instead of crossing up and over. And it's really weird to me to think like in terms of targets low, what went wrong. And the only thing I can think of is that it really had to do with that staying up too high. And I know that from experience that on AMC, when it does that kind of nonsense, it's usually not good. It's usually a bad sign. People take it, and I've done it in the past at different times. I'm not like saying I've never made this mistake. I have. But I remember this is very well the most contentious thing that often comes up when I do TA and people say no, is that this idea of like the advancing cat ear looks super bullish to us. But if it doesn't do that proper check, it's always in the same spot, man. If it doesn't do that check and it just like comes back up and it's sitting on a distribution level, like it's just super dangerous. Because you always end up with this really nasty slide, you know? And that's exactly what happened here. So by not going down on Friday, instead going up Monday, it just elevated it back to the top. And then use that to sell it down. It's really irritating. You're like, well, that's not useful now. I mean, I said as much on Friday in our group. I was just saying, like, I thought it needed to come down. I think I said it needed to hit 276 and then come back down to 267, and it never came back to 267. And then I'm just sitting here, not really even charting yesterday, just said it didn't like that it didn't, and it went up, and I said it needs to go over 267. Is if this had held and gone up and over, it's a different story. Very different story. Like again, I think that what that does is it brings the wave higher. It gets overbought. 192 goes up to the top, probably near that gap, even at 292. Very different story. It just is. But it's I guess it's just one of those things. Like it doesn't seem like it, but AMC every time comes to the exact same point of conflict. It's Always, always, always this cat ear business. And we did the same thing here, just to be frank. I mean, we jumped up and over. It looked like this one was a little more nasty because it looked like it came back up, but all right. So not the chart as we want it to be, but the chart as it is. And the chart as it is did not go up there. So we just dipped below that creek, that ice right here. Didn't actually trigger my alert, which is weird, but it went there. So it just did a liquidity test underneath that support, and the liquidity test failed. It's not the biggest failure, but it is a failure. It's like an uptrend within a range, right? But it failed. It went below it. Well, that could be a spring, right? Like I said, if it faces a hard reversal here and it comes up and above, it'd have to come all the way back up here, land on top of 271, which is the local shelf center, and then it'd have to go all the way up here. This is an SOS, basically. It's in the right space. I mean, if it can do it, it can do it. We just might be in an alternate scenario where we don't respect this trend later, or we even find ourselves beneath it going into earnings back over here. So it would be a very different setup than the one that I had presented, because again, it would be below it. It also makes it difficult because if you're below that trend on earnings right here, if it ends up coming down below that trend, you're really in a bad spot because you have then like an overhead. Yeah, I mean, that's right where it's kind of right where I drew it. Yeah, it makes me think we're going to be right here. Okay, well, it's a bad spot because now your overhead is 2 shelf levels above you. Like you have to get above both of these. It's going to look bearish. It's going to look bearish. Even if it is bullish, it's going to look kind of crappy. Monday into Tuesday, would have to see kind of a break back up here and an advancement. That's the only way forward. And even then, I'm like, man, I don't know. Everything's in the right place for it, I guess. If you put these right where they should be. If that happened right there, going into like Tuesday, that is like the outer creek, so it just wouldn't look good. It'd look bad because you're beneath that marker. And traditionally, like, that is how the distribution happens. So like you're beneath it by the time you get there, you have some sign of weakness early on, and then you hook. If you hook here, you're dead. You're dead. If you hook here, it is done. If it comes above this and then it drops through a trend or something, I'm not sure if I could hold my breath very long for that one. I think it's very likely just done. Especially if it stays elevated and then does it. You're in a bad spot at that point. I think you're probably going to drop really low. This could be a way to screw everybody over who thought it was going to run up in May. Myself included. Why not? I don't know. This thing's moving snail speed today, so I'd be surprised if it gave us any answer. The S&P 500 is doing the same thing. It's just not giving an answer. It's like just chopping here. I mean, I'm looking at it, and normally if I see something like this on the S&P 500, if it's high enough, I would think it might be bullish. But just based on where it is, I'm like, meh. I could see a rug pull here just as easily. Man, what a crap setup this week. Really disappointed. Kind of knew something was off Monday because it didn't do anything. Nothing happened Monday. And I was like, that's not good. It was like the timing was wrong. We've talked about this quite a bit, but if you have a distribution here, it's going to go down. Well, we'd have to look at certain things for sure. I wouldn't be able to tell you like the first few targets or just whatever. I've said 226 is a likely target. Again, it just depends on how this happens. We'll be able to draw some better creeks. The more major one was on the other chart, and that's the big red one. And that one, it does look like it may have been checked here. But that would be the first one. So if you have some kind of weird floaty business and you just don't go low until after earnings, and let's say you do have a hook in the wrong place, you're beneath here and then you hook and it doesn't come back above and it breaks down, the first stop is wherever this is, in my opinion. It's going to try to get down there. It would be such incredible weakness to see something like that happen. Even if this does pop to like 3 and then drop, I'd still be like, okay, well, it's going to be back there. But got to keep in mind, like, the main goal here, in my opinion, the main goal is not some perfect number. Though 226 was one I had, I also found the 188 to be very credible. I wasn't the first person to say that, but I found it later and I felt like that was a really good number. I think between 188 and 226 is a very safe estimation of possible lows. Does it have to go significantly below the bottom in order to constitute a spring? No. But I got to be honest with you, if it doesn't go up high and bring in a lot of volume, I don't know how good of it it's going to be as a spring. And that's why, like, part of me is like, I could see this happening, even going to like 3, but I'd have to wait and see what happens with the volume, because it doesn't really make a lot of sense to me to do that if it doesn't bring the OBV balance pretty significantly high. It's a hook, sure. You go low, sure. But is that a spring? I don't know, man. I don't think so. It's kind of like what happened back here. It's like, and I think Stockfather said it really well when we came down, because he said, well, I don't necessarily think it's a spring. And I said, well, I think it's going to go pretty high after this regardless. So he's like, well, it's an LSPY. It's going to come back to maybe this level and then distribute, which is a reasonable expectation that it would do that. And I suggested that it would come to one of those other targets. The lowest was like 560, which is where it ended up going. But I thought it might even push as high as like $8, right? We'll see. We'll see where it stops. Of course, there was the dilution announcement. But ultimately, like, it just came back above this top and sold off. It's not like super controversial at this point. But what was strange about it was like, this is the idea here that, like, if this is a spring, it has to jump the creek and then proceed to an SOS like immediately. So this is a very, very good fake out, because it does jump the creek. It does. It advanced the creek. And that was the change of character that we talked about happening back here. It's like, oh, yeah, it jumped the creek right here, finally. So first it looked like it's just selling off. It's going to drop right here. Very obviously looks like a distribution. Instead it reverses, jumps the creek, and then it heads all the way to the top of the range. And it's like, whoa, Well, when we look at it from a helicopter view, looking in retrospect, there's no spring action, really. There's no push here and then a drop. The closest thing we have is kind of this sideways action, and they just kind of like meanders down, and the volume is really crappy. And and just, again, looking in retrospect, it's kind of like there's no buy-in. It's just a really weak volume sell-off that slowly walks down. There's no push-up with buy-in and the massive dramatic drop. So in some ways, this is the push-up with dramatic volume and then the massive drop, but it's not even a spring. At this stage, it's already in a distribution. It's just a sell-off. It's a UTAD, right? So we could say something similar here, that if it doesn't, for whatever reason, they don't need that liquidity bump, sure, like it could just go to 3. If it dropped low, it could go back up to 3 and then slide through. It's just continuation. I wouldn't necessarily call this a spring though. You know, that's the thing, is like, unless it has this massive pump up and we get that big hike and then it drops below the surface, I'm not sure I'd call it a spring. It really looks like the other, where it just slowly walked down. You know what I mean? It looks almost the same, where it just like slowly walks down and then it's like, all right, we're just reacting off some bottom. And then if it drops again, it's like, there's no way that's going to be some massive on balance volume hike here. I just can't see it. So I don't know. I think at that point, it's just a weird, really weird setup. I don't know what to make of it. We'll come back. We'll look at it later if that happens. I'll try to redo the chart again. Yeah, I don't think we can survive a weakness here, though. It's the same setup, guys. I'm trying to be like optimistic, but like look at this setup right here, and then notice like it comes down and makes the new low, and like that's it. That's the cat ear in the middle. There's like a wave, right? There's a big wave right here. That's the cat ear right there in between, and it does come back to that point, you know. It does come back to the cross, but it doesn't advance. It fails, and then it just goes low. And it's the same exact setup right here if that happens. This is the setup as we would see it, because if this comes down low, there's just nothing preventing it from just doing this big old hook motion right there. And it's essentially identical. They're connected, but they're also like an identical motion. Very strange that there would be no shrinking there. And I've argued that there was a shrinking, and I don't want to go back on that. Not yet. But it would be a similar motion. That's what I'm trying to say. Trying this new setup where I have like a standing desk, and it's helping my hips a lot, which is good. And my hips have been really pain last week or so. But it's kind of awkward too, because my computer is high enough, but this other screen is not. I don't have a way to get it higher. So I just tilted it up. So I'm like looking down. This could be just as bad for my neck in like the long run. I think what's necessary here is, let's take a look here at this. I think we're going to need to clean this up, so I'm going to just do it real quick. I think what's necessary is again, that this flattening right here doesn't become like this bottom. It's the same problem you could have here and here. It needs to be something different. You can see what I mean, like just even visually looking at this, like if this is it, you can see like that doesn't give you, this gives you a lower low, but if this can hold, even if it has like a spring here locally, if this can hold and then build out some strength, it can't drop like way down here, you know, then the setup changes. It's a different setup. You can see the difference. So let me try to do it this way. So let's say that's 1. It really would be like this. That's 2. Oh, that's 1 as well. And then the second part of this setup, we'll just say is this. We'll make it like orange or something different. And then you do the same thing here. If the second part of the setup is a buy-in that comes down but does not go low, you can see the significant difference in that, because this is a major sign of weakness right here that ultimately led you down to presently where we are, right? It was indicating we're going to go up and then distribute. So this never comes back above here. There's probably a better way to illustrate that, but it does come a bit high, but it doesn't break out. I don't even know where this one would be. It looks super low. It'll be like way over here. That doesn't really make sense. Yeah, I don't really know how to draw that one. That one doesn't really work, does it? We need to see it on a different... Let me see it on like RSI or something. Get rid of all this junk. Probably was junk that mattered, but I'll just get rid of it for now. Sometimes it just helps to like visualize. See, this is a better example on this because this actually stayed high, which looks more like the traditional cat ear, whereas this comes really low. It actually goes beneath that previous bottom. Strangely divergent, although there's no follow through on it. This is a 30-minute chart, so it's, again, not the end-all be-all, but it is a divergence. Yeah, so I mean, if the overall motion is this motion right here, and it's kind of like propping up that next section, we could argue that's it. It's the same idea. It's right there. This looks so bad. So yeah, this is like the same thing. And it comes down really low. It just takes a longer time to get to the bottom in some ways on the RSI. That's the same setup right there. This didn't really accurately tell you it was going to go down that low, though. It really doesn't do a very good job unless you use maybe that one, that first support after the bottom. That's okay. So there's two here is, I guess, a possibility. That's one. And then there's another one right there. That's one. That one's really high. Right. So in this situation, it does not look the same right now, so I'm not saying it is. But like if the theory was true that this does come down to a new low, and it does make a new low, then actually, what am I doing here? Why am I using that? That should be for this hook. That would be really nasty. So I think what would have to be is like this would come down, and then you would bounce back up, but you wouldn't go beyond. You potentially get stuck here. It'd be one possibility, and another possibility would be that you go up to the top here. It really doesn't make a huge difference. There's no clear trend here that was sort of the same. So I think it'd be wise just to use that top layer. It's comparable to like this. That's the $3 mark. This has a really clear in and out trajectory too, which is interesting. It's almost perfect. So that's a bit odd because this definitely would not. Well, it implied that you wouldn't get back up here until June 2nd. Like it'd be really slow. Maybe even like that, right? So you'd have some kind of like a sideways here. Go up again. This is only if it like comes down to a new low. It breaks significantly low. You know, it may even be this situation where it's like a double bottom. So we probably should go ahead and mark off that bottom. It's like 239 or something like that. Somewhere around there. Well, I didn't say that, Tank Dog. I said that what we saw is a slight alteration on the plan. If it dropped this particular trend, and it did, then you have to take into consideration the next steps. There's always more than one creek to draw, but I was really specifically focusing on this guy right here. Such a minor drop, may seem like a nothing burger to a lot of people, but it always starts with some little sign. You know what I mean? Always, always, always. So if that dips it, what I said is that if it goes beneath 265, then we're really talking about a sign of weakness, potentially. If it manages to stay up here and stay elevated, we could be in just a different kind of a setup. That's not really necessarily bearish. So don't hear me wrong. If you're just joining and you don't know what I'm doing is I'm looking at the possibility that it does indeed make a lower low. And if it does make a lower low, because there's a weakness here and then it drops through to a new low, that changes the chart pretty dramatically. I don't think I ever said there was going to be a run up into earnings though. So again, I don't want to like throw that back at you, but I've been pretty clear that I didn't think that it was necessarily going to run into earnings, but run after earnings. Like this is earnings right here, and all my lines are up after. Like after earnings. There's like one scenario where May 5th looked like it might just be a big breakout. And that was the only time I thought maybe it goes ahead of earnings. It's still possible, which is why I'm like not going to throw it out and say, it's not possible, but we've seen that before too, right? We get run-ups into earnings and then a rug pull. The setup had to do with when we jump the creek and come back over, but we never did. So like there's a problem there. Let me show you what I'm talking about. So had this come back above, let me show you what I mean. Had this come back above this creek here on, like, let's say Wednesday of last week or something like that, or even like late last week. So we were talking about right here. This is where it messed up. It didn't cross back up. Had it jumped right there, what we could have done is used a measurement tool and done like a 50-50 and suggested that that's kind of like the latest it could go in some ways. Why? Because of the way these things are set up. It's just the way that they kind of build out timing wise. There was another creek that could have been jumped. We're still struggling on it right now. You can see right where we're at. We're kind of sitting on it right now. Again, had that been jumped at that particular time, we could kind of pull this backwards and been like, yeah, that's where it kind of came back up over. I thought it was going to coincide with this jump, which is the move over the middle of the range. So it looked to me like when this was approaching the top, that it would jump here and it would coincide with the leap over. That makes it pretty clean. And look, it suggests May 16th. Now you might say, well, does that mean it's going to run on May 16th? Or no, like that actually would have indicated potentially where the top is on the breakout, like, or at least breaking out. So there's a lot of like little question marks here that didn't get answered right away. And they're still not answered. So instead of, let me just put, I'll put it this way. Instead of this being like the middle of the, let me just do it like this. I don't know how else to do this. I'm sorry. I'm trying to answer his question and not be standoffish about it or anything. But had this come up to the 292 and done that move early, what I think would have happened, and it was based on trajectory in, trajectory out, I think. So I looked at this and I looked at the opposite. It's like 60, what is that? It's really steep. It's like 60.8. So like had this come back up, look at where that is. It's triangulated like right on where that false breakout happened. It didn't happen, right? See how it like didn't go right here? So had we gone down, this would have been how it would have had to, I hate to see like woulda, shoulda, couldas, right? But I'm trying to like illustrate why the timing may have changed, because when this builds back up, this gives you a stronger case that this like breaks up on a pivot right here low instead of faking out and then heading down. And then you build back up here to like 292 or whatever it ends up being. We would have seen this cat ear as like a higher push, right? Like the bottom would have just been right here. Oh my gosh. This would have been it. This would have dropped low earlier, then it could have come back and done that silly creek test, but it didn't do it. This really irritates me, but it is what it is. Instead, it stayed elevated and went into a silly little distribution and then did it again. But had that broken out early, I think we would have seen this come up and it would have been like, that's the second ear. So we would have had 1, 2. What it looks like now is a series of 2 possibilities that are not particularly awesome, but they're not necessarily horrible. It's just one of those whatever kind of moments. One is that this is 1, and this is the jump, and this is all we're going to get, and this is 2, in which case the buyout now becomes a matter of, to some degree, it's like a rotational, symmetrical type deal, because you'd have this as the initial move, right? This would be the cat ear. And if I guess if it made the advancement, which it doesn't look like, I just said it on, I said it on another chart. I said it on Starbucks, I think. I said if it makes the advancement, but it hasn't happened on price action, it could be really bullish, but it still has to make the advancement. And it just never did. So this looks like it jumped the creek, doesn't it? It looks like it did. It looks like it jumped the creek on RSI. But the price action never did. I mean, there's not really any way to argue it. If you look at the top points here, it's like, yeah, it just never got there. Even this one was like barely getting there. It's just slowly chopping across them. That's why it looks like it's going sideways. It's just going across all these creeks. So the one possibility is that that's it, and then it's going to start a move which is a weird one because I don't even know how to be honest, I wouldn't really know how to chart that beyond just looking at this push-up right here and just suggesting that that could be like a 50-50, and it's just going to go right up to 323 and SOS. I don't know. Maybe this is like the scenario where you have like a really early run Monday, but I don't know how else to see that as an S-curve. It's a weird one. I still think it's more likely that it doesn't do that, but like instead it would advance here and then potentially retreat and come back down into earnings. The other situation is that this is indeed a wave, but the wave itself is top, bottom, top. So instead of looking at it as that's actually another top, with this being the bottom, and it, again, both are kind of true. If you think about it, on the short term, it is the bottom, but on the longer term, like this is the bottom right here on the short term. But on a longer term, this whole thing could be a bottom. So then you have like an S-curve where this is actually like building out a low. You haven't even made the top yet, in which case, when you do get there, you're still going to have to deal with like a final creek cross, right? In which case, we take this a step further and we just simply look at it as this is where the final creek cross really is. This is the bottom build out. And it's going to go up top, wherever it's going to go. And it does look like it would be into earnings potentially, and then drop. This is just one example. We're on the 30 minutes. We'd have to go to different time frames to really verify that this makes sense, but because I can't verify. You got a cat on the keyboard or something? Or are you just snoring? The happy kid. Clack, 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 slapping the keyboard. Your cat walked across it. Do you understand what I'm saying? So there's not really any way to know which is which. And I think that's okay. We're on a small time frame. I think what's more likely, again, is that the build up here builds out into earnings. And then we'll see. I don't think it'd be a big deal or even that bad if this were to kind of hold up and then drop, around earnings. I think it'd be fine. I was actually saying that was ideal earlier. This would have been an ideal setup because we would have had like a layup here and then we could do it again on a really small scale. And this could be your final nosedive before like a big takeoff motion. I think that's really great. I would have preferred if this had been higher, as I mentioned before, and that the advancement doesn't come beneath, it sets up above, because I think that's stronger to set up above. So that's the way I'm looking at this. You've got a build out, you can get another wave here, and then a break. Is it above or below is really the question. I don't know. But that didn't happen. So instead, we did this weird like secondary distribution thing. So we're on either a shallow cat ear right here or a shallow S-curve where this is going to reverse. And I'm kind of going back through the same scenarios I already did. But since you're asking, I'm going to do it really quick recap where you reverse early, in which case this is like a shallow S-curve, and that is quite bullish, even though it came down below the previous lows here. But the problem is that it's still like, because of what happened, it left the door open. So I need to kind of stress that that's not really changing the reality of, hey, yeah, like that could be a bigger wave, yada, yada, yada. It could still go up and then build out into a big move. But it doesn't change the fact that this still dipped beneath that trend. And the only thing I can say about that is that for now, that means that if it comes back down again, that there's a possibility it sits beneath that trend, which leaves open a lot of question marks, because this trend going after earnings, which is about May 6th, right? So you got May 5th, which is a Monday. Maybe the market's taken off, maybe it's not. But May 5th is a Monday. You're moving this direction. You have this possibility now that we're going to get stuck beneath that trend. That doesn't make me feel good because it doesn't have to be bad, but I got to just be as honestly straightforward as I can be about it. Because you're opening that door, and it's below the it's below the preliminary support thing right here. It just makes me wonder, does it get stuck? I can't answer that. So what I'm doing is I'm running through a few scenarios in my head about how that might travel. This is maybe not as likely as some, but it's like a 50-50 drop. So the presumption here is that maybe it goes back down to about the floor or just above it. And that would fall in line with what we see trend-wise here. It would give it a lower low, which finishes like an Elliott fifth wave or something right here. And then you'd have a build out, but the problem with the build out, of course, is what I've already stated, is that this is now in extreme danger of becoming very quickly, kind of a distributive build out, because you could have it pop back up to like 3, and you can see the rotation there. It's basically done. And that's not what I want. I don't want it to pop to 3 and be done and then start coming back down again. So when we look back at this setup, that is essentially what we saw here. So we dropped low, and then we built out low. Yeah, it broke out. Yeah, it had a run up. And yeah, I made money on it. I think a lot of you did. But this ultimately doesn't go anywhere beyond much over the top. So there's not really much to hoot and holler about. It's kind of like, yep, $3 would be basically the target range for that kind of a move. And this could be like a May 15th move. Don't get me wrong. Like, there's a lot of similarities in timing. But this certainly ain't some like it's going to rocket forever kind of move. My thing about it is, again, there's no massive buy-in moment. I just don't see it. Maybe it's there and I missed it, but I don't see it. So when I look at the when I look at the OBV on the 4 hour, there's no big pump up. It's always been like kind of flattening out. We really need to get that big move and dump. And as horrible as that might sound, like, I still genuinely think that even up to 5 is possible, and then really drive the price down if we're going to go for a spring here. I don't know. 3 to me just doesn't feel like enough. 4 would be enough. 375 would be kind of like the bare minimum for me to be like, yeah, okay, I could see that. We had a lot of evidence that was going to happen. So this is not in a vacuum by itself. This is just another contender. Just looking at the motion of the waves. And my concern is if it does a repeat of what happened here, then we end up in a similar situation low. I'm going to clean this up a bit now. Again. So you end up in a similar situation, but low. And then that hook looks a lot more like a possible stop at 3. Well, yeah, but couldn't it still go and do something crazy? It could. I don't know, guys. When we talk about the market, it's like just an infinite well of possibility. And I feel like people get really upset with that, but it is very much the case. I think there's always a reason that things could be worse or better, but I mean, it's not impossible that it stops there at 3, It's also not impossible that it's something similar to what we experienced right here, and we do get a pop, but it doesn't go maybe as high as expected. I just don't see this. We would need to see this kind of on balance hike is what I'm trying to say. And we haven't seen it yet. So if push comes to shove and it does something like this, and then we get this drop down, and then it rockets again, and everybody thinks it's going to go to the moon, but it kind of stops here around 350, which frankly, I mean, it wouldn't be like the least likely thing, but for whatever reason it doesn't go any farther. Yeah, I think that we could kind of sit back and say, yeah, that might just be it. We look at a wave here on, I mean, I hope it's not the case, but if we look at a wave here on the trend, sure looks like it could be. Just the way this thing is like built out. Like that. It's very different than what we talked about before. So it needs to be addressed. That's what I was trying to get at. The whole point today was to just address that possibility of, hey, it hits that another low. You might get some big move, but it may not be what's expected. And people are assuming it's going to be this big June run up, and it ends up being kind of a flatlined attempt. I could see myself looking at this and being like, why did you ever think it would go anywhere else, if it's just trend bound. But there's more to this than just this line or this series of lines. There's a lot more. So, and if you were going to get a huge on balance hike, driving this price up to like that 480 zone may seem a little bit ridiculous. But really, this is a really great way to kind of guarantee like a massive on balance volume hike. They did it back here. It was fairly successful. So I guess if they did something similar to that, they might be able to generate just as much. I suppose we could argue that. My thing is still to this day been that we didn't come back and retest. I don't see it. I don't see the retest on, there's one here on 4 that was kind of like mild. They pushed away from it. Just $4 flat. There's nothing really there. And it just reminds me a lot of what happened back here when I was like, oh, it hasn't come back, to 14 ever. And it eventually got to where we saw it go in extended hours to like 1330 or something. But I had thought for a while it would come back up here and check that level. It took forever. Just didn't go there. Kept walking down. So what I want, I guess is what I'm trying to say, is what I want is like a repeat of here, but smaller. I want to see it repeat. It's just doesn't look quite right. Thought it would have been like a little larger. It's not huge, but it's in the right spot. Anyways, you get the idea. So my thought is pretty straightforward. If it comes down low earnings to like 240 or something, I I think there's a good chance it runs back to 350. I don't necessarily think we could count on it going significantly farther than that, just based on everything we know. And yeah, it could happen like all at once. This is very like slow. It could still be very similar where there's a build out into Monday and then just goes really, really hard for a couple days and then comes back down. That's certainly not impossible. So it could still be a massive move. You know what I mean? I don't have any calls or anything like that beyond $4. So for me, if it goes up, period, I think if there's enough volatility here on a hike, it's going to look pretty good, which is why some part of me doesn't really care if it doesn't go low, but it's really for y'all's sake. I'm not just saying that. I'm being serious. It's really for other people's sake that I want to come on and explain that setup, because it doesn't look like, hey, it didn't bounce out and do that nice bullish setup yet. Could be forthcoming, could still happen, but right now it hasn't done it. So if we get this slump, I think it's important to know that $3 area becomes highly contentious, right? It's a dangerous proposition. Is now, instead of talking about, which I had on the other chart, instead of talking about we might stop here versus we might stop here, it's like you might stop real low. Instead of talking about going from 360 and 430 up to 5, you're talking about 280 and 3 up to 350. So again, like, is that a good move? Well, yeah, I mean, it's still a 50% move. So if you're in a position where you've got pretty decent contracts, you're going to make money on it. Or if you're buying shares, you're going to make money on it. It's more, again, a question of like on balance volume. And once it hits that marker, and I've kind of gone through it enough at this point, but once it hits that marker, I'm kind of like, okay, that's it. I don't really care that much. I mean, I will care, obviously, for my bottom line. But from a technical standpoint, it doesn't really matter to me if it hits this price or that price, as long as it's, and I don't know where the on-balance volume is. I thought it was on this chart. Oh, well. As long as it's gotten to the right spot, then I'm probably going to be pretty content. Great. I guess it didn't save it. Who knows? Who knows? What's the spot, Booksy? It's a widening back here. So what happens ideally is that this goes up very, very, very high into a widening. It's not impossible that they don't need it, and instead they kind of keep it like right there. That's what happened previously, is they didn't go up beyond that point. But I have hesitation about that. I think you really need to have it. If you're going to have this like big, gigantic move that we're talking about going into 2026, I think you need to have this. There should be a creek cross here, a pump up, and then it should dump to here. And there may even be like a little bit above and a little bit below, which is what we saw in 2020. And it should be coming back to this level, which correlates to the OBV target line, which is right here on these 2 points. So there's a series of setup markers right there that you can see why I think that needs to happen. If they're trying to get the OBV reset to come back down to this level, and I think they are, and remember, they got there here as well in May, so they hit it already. But look how much lower we are, and we can't get that on balance volume down to that price point again. Where does this even come from? I told you guys that if you're thinking that in your head, this is exactly like what happened in 2020, except it doesn't ever actually get back to there. It just goes like On the price, it never goes to that marker again. But in the price action, or on the OBV, it totally does. So this is that big buy-in. There's a huge hike in on-balance volume. And I was talking about how this is like coming really low, significantly lower than these other 2 points, just like what we're seeing now. But it can't seem to get back to this level, right? And I don't know exactly how to draw this from where I'm sitting. Right here, I guess. It can't get back to this level that it sort of took down from when it was in. So notice like the full reset that happens in the on-balance volume, but notice like with the price action, it's building downward. So even right here, even though this gets really close to that marker, it's like nowhere near it on the OBV. And then the hike is the same exact setup. They built out the same markers here and here. And there's an up thrust that occurs here, and then a hook, and then it comes back down and it drops like equal parts through the bottom, and then it goes the other way and it like volleys it up like a massive buyout again off the top here. But all the while the price action is really low. That's the creek jump. This is when it's jumping the creek. It's actually, the on-balance volume is already sky high. How did they do it? How did they get that buy-in? It's right there. You know, a lot of people think, and they've said it wrongfully, I think, that this is just a short play, and it's just not. It's not just a short squeeze. There's a huge amount of buy-in that happened right here. And you might say that, again, well, that was all retail. I don't think so. Because it wasn't retail that brought it down, if that were the case. And the buy-in is like twofold. There's like here, here, and here, and then here again. And if you look at where those markers are, when you look at like those particular zones, it's all the same area. It's all like right here. It's all the same. It's just that there's a big shakeout. But look at the massive amount of change, if you will, over a very short amount of time. And get into that reset point. So the price action never actually hits that mark, which is important to note. It doesn't actually hit it. But in our present timeline, it's the same. It's the same setup on balance volume wise. It just hasn't gotten, it's never been able to get back down. So it's just like floating in the air. And so similarly, what I'm looking for is I'm looking for this break. There's one right there. You can see it's like a mild break and a retest. But then it just like won't get over this last little hump. This is the one that I would have expected right here to come up above. And it has not really done that. It's like kind of doing it, kind of not. I don't know. You can't really fudge this stuff. It really is just like hanging on by like a thread, isn't it? Yeah, I can only make it as good as I can make it. This is just different. Line charts are a little different. That's the closest I think I can get. See that? Wait a minute, Booksy. You're saying we were like, literally everything came down to like, I'm telling you guys, I was saying that earlier, like it's like I wish it wasn't that way with technicals sometimes, but it just is. It really came down to like one little move. And I mean, there's no other way to put it, but that move that didn't happen really is on that middle of that cat ear right here. It just didn't break up. I really wanted to see that advance here and then come back on top of it by earnings and be ready to go, you know. And we got stuck beneath it, so. Thoughts on Wolf? Wolf had a massive run up, went exactly to where we thought it was going to go. And I can say that because it did. And people give us crap when we're wrong, but we don't often get acknowledged when we're right. So this went back down across the creek. Can't see it on this weekly chart. There's not a lot of chop here, but we thought it would kind of break out, retest. It did. It did in a little weird way. It kind of came over later. But then it breaks out. We thought it would come all the way up to hit the top and then back up to like 350. I will say this, because it did this really early, that peak at 470 was really like a huge deal, which is why it's down like 13%. It was up like 25% every day, it seemed like, for a couple days. You know, it was a lot. So it's a big move right there. But that's kind of where I thought it would go, and then it's going to need to refine some footing here. So the reason this is kind of suspect now is that this looks like when I drew it thinking it would come back above that trend and hit this creek. I don't think it did either of those. So it's kind of missing pieces. Like it didn't hit the creek over here, it just hit the retest. So that tells me that we may still see another dip and then even another rip. I mean, you could have it kind of zigzag here indefinitely. We're just kind of missing a lot of stuff. I don't know. I drew this way over here too, so let me move that. Move that closer. Maybe I did it on a different time frame. It looks like it's all kind of off. But yeah, I mean, we got it right. It hit the target. The idea here was that it would back up maybe to this previous top or to this creek, but it's below that, so I don't know. I guess what I could do real fast. Yeah, it's still about right. You'd want to see it come back. Whoa, this is like going back in time kind of stuff. Super messed up. This line's jacked up. This could still come down to this top right here at 313, $3. It's interacting right there, 1, 2, around another point that I had drawn. That's actually a line that goes pretty far back in time. So a consolidation's a consolidation. I'll just have to wait and see. There's a trend real low here that could come way back to the floor. It's like right there. Oh, that's not the right marker. So there's this guy, which is again very, very low. That one is a possibility. I'll just get rid of this. Yeah, we got the target right. Whoop-de-doo. Let's get rid of it. And then let's take a look at another one here. Right. So, I mean, this doesn't seem unreasonable to me. Maybe we come back into this 470 pocket. You can see like a second motion here possible. Or just outside of earnings, coming up underneath it, if that happens. But consolidation would be, I really couldn't tell you. You'd probably get a weakness here and then come back above and then break down. Because they would take it down to test it, and if it fails to hold and it makes a lower low than like this guy, then they would take it back up and like pump it up into earnings. And you might get kind of that cat ear set up. So you might see one more pump back above 4, maybe even 2. And then I wouldn't be surprised after that if it takes a little breather, like a more serious breather. We'd have to wait and see what happens. That was the big move for now. News could send this thing flying. They've had a lot of bad news. So good news would send this thing going pretty fast. But just based on where it is, I would think that there need to be some kind of a backup here. And like a real breakout may not occur till like maybe towards June. There's just so many different possibilities. Yeah, like that. This move was kind of the big one. Yeah, I mean, I went up. I didn't sell when it hit the top, and I forgot what was going on. So I saw it up like way up high, and I was like, whoa, I made a lot of money. And then I was like, oh, when it came down like today, and I was like, oh, why did it do that? And then I went back to the chart, and I was like, oh, yeah, because I thought it was going to hit the top and then stop. That was the plan. I even got the alert and everything. And I don't know why. I guess I must have been busy or something. I was out of town most of the day yesterday, so that's probably what happened. Yeah. I should have sold first thing this morning. Well, I mean, I still am up on the position. I don't really care. The short term, I don't make a lot of money, then I'll just hold it. I think it's got good potential if they can get some of their finances in order. They'll be in good shape for run-ups. All right, so the grand, if you want to call it, the kind of the big picture here is not meant to deter you guys or make you feel like this is a crap play. It's really just about whether or not this is going to break up here again. And then we'd have to wait and see what happens when it comes back to this trend. If, on the other hand, we just kind of start nosediving, then we've laid it out pretty easily today and how it could get back down to the bottom. I think before earnings would be reasonable even. I don't think it has to come significantly low, though. So I know on the other chart, I drew it coming all the way down to the floor. It could, yes, it could do that, but in reality, even just coming back to 253 or 245, maybe just fine. If it's just going to go down for liquidity purposes, you don't have to necessarily go all the way beneath the floor. Yes, there's a lot of sellers in this, but there were a lot of sellers in 2020 before that big pump up in OBV. And ultimately, they were only in control when they were allowed to be in control. And then when it pumps up, they're used to help, right, on the buy-in and the FOMO and all that junk. So, ain't over till it's over, right? Anyways, let's wrap this up. Locally, in order for this to kind of break back out, you got to get back over 273. I know it's pennies, but it's pennies at this point. You got to get up over this 274, 276 area. I mean, if you're just going to say one thing, just say 276. That would be a creek jump on all levels. That would be a bullish reversal after a kind of spring, potentially. That could be very, very good. If it doesn't happen and we can't breach 271 to 272 again, then you are looking at downside continuation possible. I can't say it's 100% going to happen because it's still possible there could be more sideways here. The way AMC's going, it's been brutally sideways. But certainly, yes, there could be some chop before a drop or an advancement. That goes without saying. Regardless, coming back down through that level, we just don't want to see below 265. I think you get below 265, this is very likely going to go down to new lows before it goes anywhere else. I mean, that's all there is to it. So 265 is still the lower limit. We're not there yet. What we can say is that coming back into maybe earnings or even next Monday, depending on how this sets up, if it sets up high, we will have to kind of take this trend right here with a grain of salt and consider that it could dip below it for liquidity purposes. In fact, if we had a strong reaction here off that bottom, off that trend, I'd say it's even more likely that that's what happens, because that means that there was a bunch of buyers underneath there, and that's a good place to go for liquidity, right, later on. So we'll see. We'll see. Overall, we didn't get back to the 290. We haven't done that yet. Could still happen, but I had to present the alternatives in order to be as transparent as possible. And transparency means that you see the things that, unfortunately maybe are not the best. They may even go against what you said before, but it is what it is. Like, I don't control the charts. So if something changes, you just got to deal with it. Right now, the biggest problem that we had was this push yesterday when I was out driving around to the airport and back almost the whole day, that it just didn't advance. So we have to see it now, do it again. Otherwise, it's going to get stuck. In terms of the bigger move and like what may happen on that squeeze, I do have to say that like everything else here is still in really good spots. Like there's still a lot of really solid evidence that this gets up to the 360 mark. There's evidences that this could go as high as $5 even. And it sounds kind of crazy, like it doesn't seem like likely to happen, but it is actually very possible. I don't think that it has to be that high at all. In fact, if you look at the biggest possible picture, you would say that as soon as it breaks 320, it's kind of over the main creek. But I think that's part of what appeals to me here, is that there's a really simple setup in some ways of a jump and an attempted retest. And it's perfect for like a distribution, because if you wanted to like get people in, you'd have this massive pump and then lay it back down. It's exactly what we saw in that big move last May. So in some ways, it's like a perfect setup. And then in other ways, if this doesn't happen to follow suit right now, we just need to be aware of what's possible here. I'm still thinking that 4 is still very likely, so I haven't given up on it. I don't know, man. Like, everything is where it should be. If you're going to have a big pump and dump, all of the parts are in the right place. And last year, it was the same way. It was like there was so much evidence that it could continue down. And there were people out there who were like, it's going to keep going down. And I was like, I don't know. It could. And you're fighting against like you're fighting, you're kind of swimming upstream is what they say, right? Where the water is moving against you. It's like most of the market in that contrarian move is going to be looking at the continuation, not the possibility that just erupts the other way and what's been lacking. And that's really what we're trying to take advantage of, is like, what was lacking back here? Well, this gap is 1, 5. There's also a gap here at 4, and there's also like gaps here, It's like there's all these like little drop ledges that we haven't gone back to, and they're key markers for the grand scheme of things. And they're footprints, right? And the question is not, to me, will we do it? It's really not. It's more about like, when do we do it and how did we get there? And that if question is not even on my brain. I'm like, it's going to do it at some point, because the way that institutions trade is for liquidity. They're not going to leave gaps behind indefinitely. If they're ultimately building out a range, they're going to go back and check those things. So I think if they want to advance right now, what makes the most sense is you've already generated your 2 tops or whatever. Now you need to generate that creek, that final creek ledge that you're going to jump over. And just like we saw in 2020, it may be a little bit obscured by the way that my charts are all kind of crappy and messy. But this marker right here, if this pumps up and then distributes along 350, or even if it only goes to 4, or even if it only goes to 350, like as long as it's right here, going into June, then any kind of a sell down back beneath the floor here puts you in like a really good spot, because come July, which is, I've argued, might be the actual go time, it puts you right in that pocket right here again, which would be breaking over the local ice level, which is kind of the whip around, the 1-2 here. Everything's just kind of in the right spot. The way this is set up is scary looking, yeah, but it's in the right spot. And I just find that to be extremely, extremely good. It's just a matter of seeing it fulfilled. So, yes, it's not a sure thing. Yes, it would suck to come back down and make a new low and end up not breaking up very high, but it's still tradable, In the end, it still could be a very, very bullish setup for that reason. All right, I know I didn't get to everything, but I got to get going. I got to do some stuff this afternoon. So if I didn't catch your chart, if you asked me for something, I apologize. Try to get it tomorrow. Really just wanted to kind of get through this downside possible on AMC. I think we did that. It took forever. I probably could have made it a lot simpler, but the big picture was pretty simple, which is like 3 is a problem if you drop low, and then you could end up just dropping right back down. It doesn't mean that you couldn't go higher. It's just that's an issue. And ultimately, I think it would have to show like another accumulation after earnings, like right off this bottom somewhere. So we'd have to wait and see. That's not here yet. The S&P 500, it's kind of the same story. We talked about the potential that this pops versus dropping. I don't really see dropping as a bad thing here. I mentioned that as soon as this goes up, you're going to be starting to press into overbought territory. It could go fill the gap and still come back down. So it is what it is. On an S curve, if this just breaks all the way up, then it goes all the way up, It's that simple. I mean, there's nothing else to it. It just pops to 570 and then builds back out and goes again to 584. I think this is a good trade on an S-curve level and on a bigger picture level, because you can marry a longer term long position with a potential short position here if you're worried about a rug pull. And there's a number of things that cause a rug pull in this market. A fast rug pull here would make sense. It is checking a pretty massive widening. So that typically has some kind of a resistance to it. It's been doing a lot of chop right here along that widening. So, we'll see. If it goes above it and then drops below it, I would just expect kind of a 50-50 turnaround. Maybe not go down as low. Maybe only go back to 537 and then do it again. Right now, it looks like it's just trying to go. Doing a pretty good job of like controlling that RSI too, because it was definitely in a downward trend, and now it's kind of breaking out that downward trend. Of course, that doesn't make it seem like it would go very high, does it? Looks like it would like pop and then drop backwards. That's like the distributive pop. That's like if it hits here and then reverses. This is a tricky one, man. Anyways, I played long and short positions on it, so I'm good either way. All right. Well, you guys have a good one. I got to go eat and do some stuff, and I'll be back on tomorrow.